So should you buy a home, and what do you need to consider before you take the plunge? My name is Cherilyn Williams, a local Chicago area realtor, helping you build your dreams through real estate. And if you haven't already, please hit the like button, comment, share, and subscribe to my channel for weekly real estate content made just for you home buyers. Well, as you know, with the higher interest rates and home prices, the dream of home ownership can feel out of reach. And this is a concern for many home buyers, although we are finally starting to see a turnaround a little bit in more favor of buyers in the market, which is totally awesome for you home buyers. So if you still want to buy a house or a condo, I'm going to give you some ways that you can do it even in today's challenging real estate market environment. But before we get into that, let's look at whether you should even consider buying a home at all. So let's talk about why you should buy a home. Buying a home is a long-term investment. And one of the most significant things about buying a home is that it allows you to build wealth over time through appreciation and equity as you pay down your mortgage. And another positive thing to note is that owning your own home can bring certain tax benefits. You don't have to worry about those potential rent increases when you're renting. And buying a home allows you to have control and customizing your home the way that you desire. So essentially, when buying a home, you have more control. Now, when you're paying rent, that comes straight out of your after-tax earnings, meaning you don't get any tax deductions for this monthly cost. On the other hand, when owning your home, the interest paid on a mortgage and property taxes can be deducted if you itemize your taxes. So that is a great benefit to you in being a homeowner. And of course, renting comes with its own set of unique challenges. For instance, the landlord could raise the rents, potentially turning an affordable place into an unaffordable one just by a few years of rent increases. Also, when renting, you have to rely on the landlord for repairs and improvements. And if you have a landlord that is very slow about making improvements or repairs, and you decide to take the initiative yourself to do the repairs because you're just sick and tired of waiting on your landlord, those improvements to the property belong to your landlord and not to you. So you just help your landlord improve their property instead of you just doing this for your own property. And then what happens if your landlord needs to sell property that you're renting? You run the risk of your landlord kicking you out. So as you can see, not having the responsibilities of property home ownership can be a relief, but there are downsides to renting that can be quite problematic. Now, when owning your own home, that means you can hang whatever you want on the walls. You can paint the inside and the outside of the home any color of your choosing. You can add an addition if you want, and there's just so much you can do. And you can really make your home the way that you want. Now it's time to be fair, and let's talk about the downsides of buying a home. Sometimes buying is not in your best interest, and it's not for everyone. Obviously, if you can't afford the down payment, the monthly mortgage payments, taxes, and the upkeep, it's not the right time to buy. In contrast, if you have eliminated credit card debt or paid them down a lot, you could consider buying. One other reason it may not be a great time to buy is if you don't have an emergency fund of at least 6 months worth of living expenses. You should not jump into home ownership. You have to know that buying a home is a long-term investment. And my rule that I tell many people is that if you don't plan to live in your home for at least 5 years, you should rent. You also have to look at your lifestyle. If you have a career or job where it requires that you move a lot or relocate somewhere every few years, renting would make more sense. So do you think you're ready and prepared to buy a home? Let's talk about the 7 steps to prepare you to buy a home. So the first thing is you must be financially able to buy a house. This means you have to have an income and a reliable paycheck. Beyond that, you should not have accumulated credit card debt, and you should have enough cash to cover the down payment, maybe the moving costs, and an emergency fund. Now, to help you determine what you can afford and to know if you'll actually be able to get a mortgage, you need to speak with a lender to see if you can get a pre-qualification or a pre-approval letter. Now, there is a big difference from a pre-qualification and a pre-approval, but they both are done by speaking with the lender who will provide either one to you. Now, Now, the pre-qualification is when the lender will do a basic just letter and not do a real thorough examination of your finances. They are just basing the pre-qualification off of what you're telling them, like over a telephone call or online. The lender is not doing an in-depth check of your income and your assets, your bank statements, or your taxes. And a pre-qualification definitely does not mean that you will be able to obtain a mortgage with a lender. So that's why I always recommend that you go ahead and you shoot for that pre-approval letter and not the pre-qualification letter. Because with the pre-approval, your lender will do a very thorough examination to see if you are in a good financial situation to buy a home. And a seller will look at you more favorably if you already are pre-approved, because it tells them that you can afford their home and they can have a smooth sale more than likely, which of course, this is what the seller really wants. Now, once your lender views your financial situation, and if it's good, they will provide to you a letter stating a range of the price of home you can buy. This letter will also state the type of financing that you qualify for, like FHA or conventional. It will also have how much you plan to put down on the home. Now, when you get the pre-approval letter, you should have a copy and your realtor should have a copy so they can know what price range of homes they need to search for in their MLS system. And like I mentioned, this pre-approval will be essential to the sellers because they need to see that you are a stable buyer and that they can rely on closing on their home with you. So basically, it works that when you make a decision on a home that you want to purchase, your realtor will send that pre-approval letter along with the written offer to the listing agent to review with their sellers. And the sellers will review your offer and your pre-approval letter to make a decision on you becoming the new homeowner. So a quick tip before you start looking to buy is to know where you want to live. And like I said, intend to be there for at least 5 years. Don't overextend yourself. Being house poor is no fun. And I did do a video on how to prevent becoming house poor right here. So check it out. Now, if you feel you are ready to take that leap into home ownership, there are 7 more steps you need to consider to ensure you can afford a home and not financially overextend yourself. Now, number 1, if you can save at least 20% to buy a home, that's great. But that can be a lot of money and it can be very difficult to come up with a large amount of money, especially as a first-time home buyer. For example, if you wanted to buy a $500,000 home, you would need to come up with $100,000 if you put 20% down. But on a good note, it's not necessary to put 20% down on a home. There are loan programs where you can put as little as 3.5% down, and with the VA loan and the USDA loan, you may not have to put any money down at all. Although this sounds worth pursuing, unless the interest rate is much lower than a conventional loan, it means your monthly payments will be higher and you might also have to pay an additional monthly amount for private mortgage insurance. However, to avoid having to pay mortgage insurance and to keep your payments lower, if you can swing it, your goal should be to save at least 20% of the purchase price. But like I said, it's not necessary. So try and be creative in your savings strategies. And who knows, maybe you can shoot for a raise or a bonus at work, or maybe you can ask for help from your parents or other family members. So just don't dive in until you've saved a chunk for that down payment while still leaving yourself with an emergency fund. Now, number 2 is building your credit score. Okay, so building a strong credit score is so important when buying a home. It's just as important as the price or having money for a down payment. A high credit score, in addition to helping you qualify for financing, can also lower your interest rate and reduce your monthly mortgage payment. Because the higher your credit score is, the best interest rate you will get on your home. So here are my quick tips on what you can do to boost your credit score to move into the home of your dreams. First off, pay your bills on time. You also want to check your credit reports periodically and dispute any errors. Pay off your debts and keep your credit card balances low. Ask creditors for late payment forgiveness to avoid posting on your credit report. Avoid unnecessary credit applications. And if you don't have a credit history, consider starting with a secure credit card to get your credit history started. Okay, so for number number 3, there will be a need for budgeting both before and after buying a home. Living within a budget helps with saving money for the down payment because believe me, finances will change once you own your own home. Now, once you move into your home, you don't have to worry about saving for that down payment anymore because that is over with. But now you will have monthly bills that will be completely different. Now, even before signing the closing documents on your home, you should assess your finances and what they will be after you move in. Create a realistic post budget that details income and expenses and revise it as needed as you become more accustomed to your situation and living in your new home. You can also try using budgeting apps to give you guidance on budgeting. Now, for number 4, you need to consider all your options when it comes to choosing a mortgage and a lender. When financing your dream home, don't settle for the first lender you come across. And I preach this every time. Even if a lender provided to you a pre-qualification letter, it doesn't mean you have to use that particular lender. Shop around and compare rates and terms from different banks. There's mortgage brokers, credit unions, and online lenders. And you can also explore seller financing. And that is when a seller can become like the bank for you. I know some of you may have not heard of seller financing, and we'll have to talk about that in another video, but that's another great way that you can own a home. But be sure to explore the possibility of qualifying for government loan programs like FHA, VA, and first-time home buyer loans. Some other loans that are available to you are adjustable rate mortgages and interest-only mortgages. These mortgages are great for buyers that expect income to increase in the near future. These mortgages offer a lower initial payment compared with a conventional fixed rate amortized loan. However, at some point, the interest rate can reset or change with these mortgages, and full amortization will be required. That is why most home buyers like to stick to the most common one, which is the fixed rate mortgage, because the interest rate stays the same for the entire loan term. So before committing to an adjustable rate mortgage or interest-only mortgage, be sure to truly evaluate your risk tolerance, including the worst case scenario and your future income projection. Okay, so number 5 is that you have to be flexible when buying your home. Finding your dream home and buying the right home are 2 different concepts. If you really want home ownership, being flexible can make the difference between success and failure. Consider different locations and dwelling types, like a townhome instead of a single family home. You want to consider the size of the home and if the home is in need of any TLC and the age. By expanding what is acceptable, you might find a more affordable home that still meets your needs. And what I'm seeing and dealing with in today's market, this is exactly what many home buyers are having to do. In the choice locations, like in a major metropolitan city or the best suburbs where everyone wants to live and there's good schools, home prices can be very high and unaffordable right now. So many buyers are having to go outside of their ideal buy box to other cities or areas that they didn't first consider because prices tend to be a little lower when you expand your search further out. So really try to be realistic and don't be closed off to exploring other areas and locations. Also, consider using a buyer's real estate agent that knows the areas where you want to live. Having a professional in your corner can help you find what you need, and they can represent your interests and ensure you are not overpaying for your new home. Number 6 is that don't be afraid to negotiate price. If you have an agent, that is what they will do for you. You and your agent should always look at the home comparables of similar homes in the neighborhood you're interested in to be sure you are not overpaying for a home. And I say if you can't negotiate a fair price, never ever be afraid to walk away. And for number 7, and one of the most important steps when buying a home, is just to be patient. If you can't make a deal for the house you want, just let it go. There will always be another home that's right for you. And if you are finding that prices or interest rates are keeping homes out of reach, just give it time. Patience is key to being successful in your quest for home ownership. So I want to thank you for tuning into my video. And if you are needing help with your real estate needs in the Chicagoland area, reach out to me. I would love to help you find your dream home. Thank you for watching.